For TraderInsight.com, I'm Adrian Manns, and it's time for your daily dose of the doctor. This morning in the first hour trading pit, we had a bunch of Baltimore Chop 2 standard deviation opening gaps to choose from. The one that we focused on, and I think Rick also focused on, was Verizon Communications Incorporated. I know he also took DHI. VZ was the one that just looked best to me, and let me show you why. I like to see an opening gap that reverses down into the range like this one, so that we get lower highs and then we get one of these small bars down at the bottom and a reversal of the high of that bar. So in my case, I was looking for a 50-22 entry on the deepest bar of what we'll call a pullback here, right? Because the opening gap is basically a big pullback. And once we had that 50-22 entry, there was some difference of opinion about where we were going to be getting out of these trades. So Rick had focused his attention initially on this 50.79 high of the opening bar. I was focused on 50.52. So the difference here lies in the fact that I'm using volume by price quite a bit in my analyses, and the close of that first bar of trading saw quite a bit of volume build up right out here. And once that was in place, I just really thought that it was most likely going to be the case that it was going to have a hard time pushing higher. Something else we could have done here was just trailed a 10-cent stop once we had this initial push, but that would have just got us right back out at 50.52 again. In either case, the real difference lies in the fact that I like to automate these trades quite a bit. So once I've got this initial position on, I like to set up an OCO order that'll just get me out if I hit 50.52 and that trails a stop down below the entry bar that got me in. So down around $50 a share is where my initial stop was. And once that order was out there, I just like to leave that kind of thing to trade on its own. What Rick is really good at is looking at these and saying, okay, he's going to try to get an additional extension. And if it doesn't do something he likes right away, then he's going to go and bail on the trade. And that's all right if you're actually going to do it, and he does. He pulls the plug really quickly, as most of you have seen in the first hour trading pit, if something doesn't go exactly the way he expects it to. But for me, I like to be able to focus on the next thing and just let things sort of play out the way I expected them to. So that's it. That's the difference that we had this morning in Verizon Communications. I know some of you were wondering, scratching your heads about why the difference in opinion about where this thing was going. Just a very simple metric here. Probably has mostly to do with this volume by price data on the side of my charts. So if you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. The best trader education anywhere, only from traderinsight.com.